Just to brief you about revaluation of assets and liabilities, students, we must recall a simple accounting principle that we had done in 11th standard, that is historical cost principle. As per this principle, the assets should be recorded at their acquisition value, which includes their purchase price as well as any cost of installation or transportation incurred at the time of purchase. Besides this, the value of assets should not be changed or altered throughout their lives. This is what we had read in historical cost principle. Now students, what practically happens is that over a period of time, the value of assets and liabilities also is not reflective of their market value because of this concept. Why? Because over a period of time, there are certain fixed assets where their market value would have appreciated a lot, like for example land and building. Then there are assets like building a plant, machinery, that is the depreciable assets, whose market value would actually have been much lesser than what is being reflected in the books of accounts. So at the time of admission, it is very important that we must revalue our assets and liabilities so as to reflect the current market position of the business. For this purpose, revaluation account is prepared. This revaluation account is also referred to as profit and loss adjustment account. Remember students, it is usually referred to as revaluation account, that is the account which is prepared to bring about changes in the values of assets and liabilities so as to reflect their market values. This account is also referred to as profit and loss adjustment account. So now students, what are the journal entries that are made to revalue assets and liabilities? The first case is when the value of assets is to be increased. Value of assets increases. So in that case, entry would be assets account debited to revaluation account. Since assets are real accounts, they are debited to show increase in their value, and revaluation account is credited. Remember, it is only the differential price or differential value that is recorded. Then when the assets are to be decreased, when the value of assets is to be decreased. In this case, when the value of asset is to be decreased, assets would be credited. So entry would be revaluation account debited to assets, that is differential value or decrease in value. Going by the rules of accountancy or 3 golden rules, assets represent real accounts, so credit what goes out. Since the value is decreasing, they are being credited here. Now coming to liabilities, similarly, just like the values of assets have been recorded or their changes have been recorded, there can be changes in the values of liabilities also. Let's see how they will be recorded. The first situation would be the value of liabilities increase. Now students, if the liabilities are increasing, the entry would be revaluation account debited to liabilities by their names. Let's say it's loan, so to loan account. If it's outstanding wages, it would be to outstanding wages, etc. Again, it is the difference in the value that is recorded, or decrease in the value or increase in the value that is recorded. Then if value of liabilities decrease, Now students, when the liabilities are decreasing, entry would be liabilities account debited to revaluation account with an amount that will be equal to decrease in value or the difference in the value that is appearing in the balance sheet and the market value that should now be recorded. So the difference in the value or decrease in the value, either way it is same. So remember students, if the liabilities are increasing, it should be revaluation to liabilities. If the liabilities are decreasing, the entry would be liabilities to revaluation. Now, when you have made all the adjustments regarding assets and liabilities, the revaluation account, if it tallies out, that is okay. But in some cases, it might show certain profit or loss. So that profit and loss should also be transferred to partner's capital account. So if profit is there, in case revaluation account is showing certain profit, or we can say that the credit side is greater than the debit side. In case your credit side is higher, that shows profit. So the journal entry for distribution of that profit would be revaluation account debited to old partner's capital account. This is the profit, and old partner's capital account means in old ratio. Remember, since the revaluation of assets and liabilities is being done for those assets which were acquired before the admission of the new partner, so any profit or loss accruing out of their revaluation should be adjusted among old partners only. And in case of loss, it would be a reverse entry, that is old partners capital account debited to revaluation, that is the amount of loss in their old ratio.